Hey stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the Edge Finder, completely for free. Now, how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the Edge Finder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the Edge Finder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now, here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the Edge Finder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream. Good morning, everyone. Welcome back to another daily live stream. Happy Wednesday. Hope everyone is doing well. We've got the stock market, the indices continuing to rip to new highs here. Take a look at the S&P 500. You've got almost 6,500 on SPX, which is pretty impressive. Taking out the previous highs, what is pretty remarkable about this is you had that NFP report that kind of missed expectations big time, and then the market has kind of trudged higher anyways. Momentum is a strong factor here in 2025, and it is sort of incredible what we've seen. Like 2025 has been a crazy year where you had a huge stock market drop only to be followed by a recovery that has more than overshot to the upside. I mean, really an impressive move here in the stock market this year. Can it go on forever? Yeah. No, but it feels like it, right? It just seems like the stock market goes up every single day. The VIX continues to trail lower. It's down another 2.44%. Guys, we've got a VIX at 14.38. And this matters quite a bit because it's telling you that the market is very settled. It's very calm out there. Waters are calm. That's what the VIX is telling you right now. People are saying, or the options market is saying, things are a-okay. Markets can keep going up. You've got speculative stuff going crazy. Did you guys see Ethereum this morning? Look at Ethereum. Ethereum is up another 2%. It was up 5% yesterday, I think. No, it was up 9% yesterday. Like, you've got some real bullishness out there in risk assets. Stocks are ripping. Crypto is ripping. And I think part of it is a weaker dollar, right? And rate cuts expected. I think that plays a part. I think at the same time, you have strong corporate earnings that have been remarkably resilient. You have, yes, you did get an inflation print that was mixed yesterday, but the market is in. Somebody asked me a good question on yesterday's video. People said, Nick, why did the stock market go up anyways? Because if you heard me yesterday, then you know what I said. I said, if you were listening to the live stream during CPI, I pointed out that there was a mixed CPI report yesterday, and I wouldn't be surprised if the stock market kind of left the day unchanged. Well, I was wrong because the market kept going higher anyways. But initially it kind of like jumped up, and then it shot back all the way down, and then it just ripped for the rest of the day. So why did the stock market go up yesterday on an inflation report that was largely mixed? Well, because it pretty much locked in and confirmed there's a very high probability we're going to get a rate cut in September. Yes, core CPI was a little bit hot, but headline CPI was a little bit cool, and it didn't change the trajectory. We were already expecting rate cuts. That pretty much locked in. Okay, a September rate cut is pretty much on the table, and the stock market rallied. it doesn't take a lot. When the stock market, when the indices are in rally mode, it doesn't take a lot for them to kind of drift higher and just kind of naturally keep going up. Now, it does take a lot to really change the trajectory of the market in either direction. When it's in sell mode, it just wants to sell. When it's in bull mode, it just wants to go up. And so this is not a market that I try to short. It's not a market that I try to time the top on. I have said over and over on the streams and videos that I am interested in the stock market on the long side, but really would need to wait for pullbacks. And at this point, a 5% pullback. I mean, just look at how much aggression to the upside we've had recently here. A 5% pullback gets us down into, this 6130 level. 10% pullback gets you into the 5800 level. To me, those are moderate pullbacks that would look a lot more attractive. So again, not to sound like a broken record, I say this almost every day. When the market is drifting up like this, I can't justify going long just because the risk to reward does not look super great to me. But if you do get a market sell-off or a correction, that to me would become a lot more attractive. What's up, Bulent? Good to see you, my friend. Markets can remain, Chris shared a quote, markets can remain irrational longer than you can remain solvent. An excellent description. Absolutely, right? The market can keep going a lot longer than people think it can. And that is why position sizing is so critical. So when I look at the NASDAQ, the S&P 500, this is why trading, or one of the many reasons why trading is difficult. It's very patient, or it's a lot of difficulty to wait patiently for setups to come to you, because they can go on for quite some time in one direction. And if you're just sitting on the sidelines, it can feel maddening at times. You're like, dang, I want to be long the NAS, or I want to be short something, right? Or whatever your trade setup that you're supposed to be in, it can be very frustrating to have to wait for it. But it's part of the game. So it comes with the territory. If you're going to be a trader, a lot of times you're going to be sitting there waiting. You're going to be waiting for trades to come to you. Maybe the biggest FOMO for me is the Russell trade, right? So I was long Russell. It was, I ended up getting long right here, and I closed out of my trade right here. So I made a good profit off of that trade, but obviously, hindsight 2020, dang, I should have bought back in because, here it goes again. But you can't do that to yourself. In actuality, I know, I took the trade I was supposed to take. I was watching for setups. I missed it. It's going to happen. And we move on to the next one. Speaking of next one, let's take a look at some criteria. What are we looking at? What's on the radar here today? I'm going to go to my top setup simple page. I've been using this page more and more. I don't know about you guys, but for Edge Finder users, this has become my bread and butter, just the top setup simple page, because what it tells me is I don't necessarily need to get into the weeds on exactly why the score is +10 for gold. I can do that. We do it often. We'll pull up the individual, what's inflation giving us, what's CPI giving us, what's the commitment of traders data, what are institutions doing, what are retail traders. We can go look at all that. But to be honest, the ultimate utility of the Edge Finder from the beginning was to be able to just get a watch list of things that have generally good scores on the economic data front, the technical data, and sentiment. The Edge Finder is so popular because people are like, dang, fundamentals is a lot of work. So having a software that automates the process is why the Edge Finder is a really top selling product. There's so many people who are like, fundamentals are super powerful, but they're a ton of work. And so the Edge Finder fills that gap. It is why, it's popular. So speaking of Edge Finder, let's talk about some setups. It's looking at gold bullishness, which I like that call. However, again, I've just been in this funk here recently where I have not been able to find a lot of trades because, volatility is very low. So stuff is not moving a lot, right? You've got VIX down, like I mentioned earlier, 14.4. I mean, the VIX is super low. And if it hits 14, I'm considering buying some puts on some stuff. I'm not quite there, but if it goes under 14, man, it's going to be tempting for me to buy some puts on maybe some stocks I'm not a big fan of. to sort of hedge my portfolio, because again, I am long a whole bunch of stocks, like individual stocks, and I've got some options trades on. But I do think that the market is starting to get, in fact, we got to do some checks on this. I'm going to come right back to gold in a second, but S&P, NASDAQ, we need to do something. We need to check our latest sentiment readings, because we did get the investor sentiment survey, which is a weekly filed report. It came in last night, and this is really interesting. So, okay, so we actually got, is this correct? Is this the latest data? Okay, yeah, I think it is. We got, let me just double check that this is correct. Okay, I guess it is. Latest data here, investor sentiment survey. A little bit of bearishness in the room. Very interesting. That actually surprised me. I thought we were going to get way more bullishness. So one survey here, remember that when we look at sentiment, you want to look at a collection of indicators, because sentiment is, it's sort of difficult to track sentiment. You want to look at a range of stuff. So anyways, investor sentiment survey is leaning a little bit bearish, which is really interesting. What about the put to call ratio? Let's take a look here. Wow. Extreme put demand. Wow, this is really interesting. So let me look at also NASDAQ, because this is pretty shocking to me. Okay, NASDAQ. What about Dow? Okay, Dow's kind of mixed. Russell? Okay, so there's high call demand on the Russell. So that would tell me that, okay, Russell may be a little overheated. But then when we look at the S&P, this is really interesting. The S&P 500, we actually see a big surge in put demand. Even though the market's gone up, that's really interesting. Bashi makes a good point. I think that could be because of the CPI data. Yeah, so people might have put on a bunch of puts right ahead of the CPI report, which of course, if you put on a bunch of puts right before the CPI report, it's not looking good, right? If you bought a bunch of puts, the market has kept going higher. But actually, that's really interesting. What that tells me is, again, it makes me even less willing to short. When you have, crowd sentiment buying puts into a market rally, to me, that tells me, oh, we might just squeeze, right? We might just squeeze higher for the next few days. So again, the way to read this, if you're unfamiliar with this indicator, it's the put to call ratio. It tracks the options market volatility or options market volume. And what we can see here is that when this line goes high, that tells you that there's a lot of people buying puts or bearish bets. So if crowd sentiment just got really bearish, then that tells me you could still see the melt up continue, right? So if the crowd sentiment just got bearish, oh yeah, we're going to go lower. Again, we talk about sentiment as being a contrarian indicator. When everybody gets long or everyone gets short, the signal is kind of the opposite. So if everybody is getting bearish on the S&P 500, to me, that suggests you might just get a surge this week to kind of just short squeeze. Let's talk about gold, because we also have the put to call ratio for gold. We can see this is pretty neutral, so crowd sentiment, but it does seem like people are getting a little bit more on the bearish side of gold, which to me suggests it's not really at an extreme. I do like to see these things above the threshold to give me any sort of signal from the put to call ratio. I talk about the put to call as one of my favorite indicators for sentiment, because I think it's so simple. You're just looking at options volume and saying, are people buying bearish bets or bullish bets? And so when there's a huge surge in put demand, that to me suggests, okay, the crowd is bearish. So on gold, I know there's a lot of people who watch gold and trade it like crazy. I've said this over and over and over. Gold has been so choppy and range bound. I think it is a really disastrous thing to trade right now, personally, until you get some sort of more clear move. I would venture to guess that a lot of, trading activity that people have been doing in gold in the last few months has been very difficult if you're a trend follower. If you're if you're like a day trader and you trade, breakouts, maybe you've done okay. But look at this 4-hour chart. This is just a choppy mess. Everything kind of reverses on gold right now. Now, again, that is not how it's going to stay. Gold typically trends, ranges, right? It goes into phases of each type. And we don't know exactly when it's going to stop ranging. But right now, to me, it's like this thing is super range bound. Let's not overcomplicate it. Gold yesterday chopped back and forth, probably, really messed up a lot of people. Today, it's kind of doing the same. The last few months have been gold moves higher. People are like, oh, here we go. And then it goes lower. And then it goes lower. And people are like, okay, here we go. We're going to go lower. And then it goes up, right? So that's a tough one to trade. Gold to me, I know people don't like to hear this because a lot of people love to trade gold. And I get it. I love trading gold too. But gold has different seasons. There are times when gold is like, it's so crisp to trade. There are times where gold is just, it's moving and grooving, and its chart looks like, it cuts like butter. There are times though where gold is a dangerous beast, where you are trying to catch moves, trying to catch breakouts, and you are getting chopped to pieces because I only trade gold, right? In my opinion, that's famous last words. People who say I only trade gold. The problem with that is, and again, you can only trade gold. Don't get me wrong, but a lot of people who say that, they'll go down the rabbit hole of like forcing trades because they only trade gold. So they're like, I gotta trade gold, and then gold just is choppy as anything, and they're just donating money to the markets because there's not actually any moves happening there, right? People right now need to trade gold, or trading gold need to scalp. I made over 2K yesterday. That's awesome. To me, scalping is the hardest way to make money in the markets. If you can do it, more power to you. The reason I'm a big, I just don't love scalping is your trading costs when scalping are astronomical. You have to not only, it's hard to find an edge in markets, which I discussed at length yesterday, but not only is it hard to find an edge in scalping, even if you find an edge, there's a good chance that it will get eroded by the very high trading costs that you have to pay when you're scalping. Every time you enter and exit, you're paying the broker, right? And if you're doing it constantly, that mounts up a lot of, any potential edge you find in the markets. That's why I'm a, big advocate for swing trading, is that when swing trading is done right, it's very cost efficient compared to scalping. To me, that's the number one. Maybe the number one reason I like swing trading is because I think the moves are a little bit more clear when swing trading. Look at the daily chart. It typically is just a cleaner chart than like a 5-minute. To me, the daily chart is very clean, makes a lot of sense. I know I sound like a, swing trading supremacist, but, and I kind of am. To me, swing trading is just the easier path. I know a lot of profitable swing traders. I know very few profitable day traders and scalpers. I know it's more popular to day trade and scalp, but again, what's popular is clearly not working for most people because most people lose a lot of money in the markets. So to me, I've seen a lot of people over the years convert to swing trading because they're like, okay, it's less noisy, it's less costly to trade less frequently, right? Trading, each time you trade, brokerages are not doing their business for fun. They're doing it to make money. And so the more you trade, the more you pay to the broker. So anyways, Bashi's, that's a good point. Just because it's a trading day doesn't mean a day to trade. It's true. There are times to sit out. There are times to do nothing. Anyways, again, and that to me is perfectly exemplified by gold right now. There's not anything to do on gold for me right now. There may be for you. And again, I have my system. You may have yours. It's different and you may be doing great with it. But for me right now, gold is too choppy. I like it to the long side. Like I like the idea of, okay, if jobs are cooling and inflation is kind of sticky, that stagflation type of environment suggests to me gold bullishness makes sense. But I'm waiting for the momentum. Like I like momentum a lot when I'm trading for, a trend following approach. I want momentum to move, right? Look at this, VIX down to 14.4. Why do I keep referencing the VIX? Well, guys, volatility tends to be a mean reverting type asset or concept. What I mean by that is when volatility is really low, it typically snaps higher. And when volatility is really high, it typically snaps lower. and vice versa. It goes back and forth. And so, I mean, just look at the VIX over time. You can see this chart typically when it gets really low, like it is right now, to me, it starts sending off a warning sign that you may get a volatility spike. The markets are super complacent right now. They're super relaxed. They don't see anything going wrong. And I'm not a bear. I'm not like, oh, the world's going to fall apart and nobody sees it coming. I'm not making that prediction. But when everybody is kind of at peace and like, oh yeah, markets are just going to, cheerio, it's going to go higher every day and it's all good. That's when you get the surges in volatility that scare people all of a sudden and they catch people by surprise. That's what happened in April. That's what happened in December. That's what happened kind of in March, but really in August of last year, you get these huge volatility spikes and people don't see them coming and it moves everything, right? Forex all of a sudden will move dramatically. Gold will start surging in one direction. So just when the waters seem the calmest, that's when you want to be really careful that you're not just kind of like, oh yeah, no, I'm just going to buy the S&P because it goes up every day. Yes, it does until it doesn't, right? That's how markets trick people. They get into the thinking, oh, the NASDAQ just goes up every day. Not sure if you guys have seen this already or not, so I'm just going to make a quick plug. If you guys aren't in our Telegram channel, we're doing a free Edge Finder giveaway this week. We're giving away a copy of the tool. You can start using it for all of your fundamental analysis as well as sentiment analysis. If you don't have a copy of the Edge Finder, I'm going to drop the link here in our chat to our Telegram channel. So all you have to do to enter the Edge Finder giveaway is join the Telegram. We'll drop the link here in the chat. So click that link, join Telegram, and then part 2 to that is then enter the form right here. So step 1, join the Telegram. Link is in the chat right now of this live stream. Put it up on the screen. There it is, right? That's step 1. Step 2 is just enter the form right here that we just dropped in the Telegram, and you might win a copy of the Edge Finder. It's a $1,400 product that you could win for free just by entering your name and email. Full context and transparency, you'll be added to our email newsletter. We share trading tips. We share fundamental analysis and research that we're doing. So if you're interested in getting those emails anyways, it's worth joining. And if you're like, I don't want you to send me emails, no problem. Enter your name into your email, and it's really easy to unsubscribe. It's like one click. So we don't want you on our email newsletter if you don't want to be on there. We're not trying to just spam you with emails, but if you are interested, our team has done a really good job putting together all sorts of trading tips, fundamental tips and tricks. So if that's something you're like, oh, actually, I'd love to get those emails. Again, you can start getting those emails with our just by joining the Edge Finder giveaway. So even if you don't win, you'll still get great emails on what's happening in markets, trading tips. So put in an email that you use if you want to get those emails. So, let's see. Volatility index down to 14.38 here. I know I keep looking at this. Volatility is just getting crushed. Dollar index is lower here this morning again. So a little bit of follow through from yesterday's sell-off. Let's take a look at yields. I do think dollar is likely headed back down to the lows. We were talking about this in the our Discord group chat this morning or yesterday. That to me suggests euro might be moving higher. So I do like euro higher. I think that's probably headed back to 1.18. Dollar CAD, not really super bullish or bearish there. Euro pound continues to come down. I'm looking to get out of these trades that I've been in. I'm probably going to just take a really small loss on this overall. CAD Swiss, not so hot, still just sitting there waiting for that trade to make a move. What was I looking for? Oh yeah, yields. Yields lower. So this is pretty much showing you, okay, the bond market is saying rate cuts are coming. That's pretty much locked in for September. What will be up for debate will be the rest of this year. We're going to get a couple more rate cuts or not. So we'll see. Bonds are higher here this morning off of this, right? So you get a bounce in bonds, which makes sense. At the same time, crypto is higher. Did you guys see Ethereum? Look at that thing. Ethereum is ripping here. Bitcoin trying to break out through its all-time highs. Lots of momentum there. I would not be surprised if you know, we talked about this morning, guys, but look at this. So the put to call ratio on S&P, even though S&Ps are at their highs, the put to call ratio is still showing a lot of put demand. There's some bears out there. And to me, when you get bears showing up, that tells me there's more room for the bullishness to continue. So you might get a little bit of a risk on surge. Let's take a look at our Bitcoin to gold ratio. Yep, take a look at this. So this is suggesting risk on because this is trending higher. That's showing you Bitcoin is outperforming gold. It's a good indicator of risk on sentiment in the markets. So people are out there taking risk. To me, again, I am cautious here, but if I had to pick a direction, and I'm not, I don't have to do that. That's the beauty of trading. The path of least resistance to me on things like Bitcoin, NASDAQ, S&P, it's a parade out there. The parade is really, it keeps going. So I would not try to call the top on the S&P. I would not try and call the top on the NASDAQ. The Dow Jones looks hot. Russell looks strong here. Again, not a time for me to try and call the top on indices. I would not actually go long personally, because again, I think that the risk reward just doesn't make sense, because right now, okay, if I go long the S&P, if I go long the NASDAQ, where is my risk to reward here? Right. The most clear level of support that I have is 4.4% away, right? That's a distance. That's a big stop loss in terms of, what am I looking for? Is the market going to do that? I mean, it could, right? But the probabilities of that without any sort of, I feel like there's a much, or I would feel more comfortable with the idea of buying that dip with a stop loss below, right? I would much rather take that trade if it were to set up, right? Rather than try to chase up here. And it can be painful because this thing could just melt. You could just see this. You could see, another week or 2 weeks of just upward drift on the market. So it can be logically frustrating to be like, I think it's going to keep going higher, but I don't like the risk to reward because I don't have and I could get fancy with it. I could try to be like, oh, but you could put the stop right here. You could play this trade. I mean, maybe for more of for a 4-hour chart trade or something like that. But I just prefer, I think that the markets, when they do have something come along that is a little bit more scary to them, I think you'll get a really quick drop. And so to me, you've had this frothiness in the market. I don't think we're in a bubble. I think we're in a market that just wants to run. It just is expensive. It's an expensive market. You're talking about the earnings of companies versus what the valuation of the stock market is. It's expensive. It's an expensive market, but that doesn't mean it can't get more expensive. It can keep going for a while. So yeah, to me, it's the melt up continues. I have a lot of stocks that I own. I am continuing to sort of just hold on to them and sell covered calls on stuff. That's personally what I've been doing, taking some profits where I can. And I'm trying to build some cash for a market sell-off that I don't know when it's going to happen, but eventually you will get pullbacks. What do you think about PPI coming out tomorrow? It's happening at 8:30 Eastern. Why would they do that? And how will the markets, is it coming out earlier than usual? I don't think it is, but I could be wrong. Tomorrow you have the producer price index coming in at 8:30. I would have been shocked if it was 5:30 a.m. That'd be really weird. No, it's 8:30 a.m. Eastern time. It has the potential to move markets. So do the unemployment claims. I wouldn't put a high caliber of probability, and neither would the market. Look at the VIX. If the market thought there was going to be a big surge in volatility tomorrow around the producer price index, the VIX would not be at 14.38. So that could be a surprise. You could get involved. It wouldn't be the first time. Sometimes you get a surprise in volatility. The market moves a whole lot more than people thought, and maybe it will. I just won't bet on it. I'm not going to bet on. To me, the easier bet in indices is wait for the drop, create a risk-defined entry, stop loss, and then try to play for the rebound. And that has worked really well in a bull market. In a bear market, that will work terribly. Trust me. In 2022, everything I tried to buy would just get cheaper. So trust me when I say it's easy in a bull market to buy dips. It is not so easy in a bear market because dips become crashes. But for now, market continues to push higher. Guys, we talked about this earlier, but just a quick reminder, we're doing an Edge Finder giveaway right now. We're giving away a copy of the tool completely for free to one lucky person inside of our Telegram channel. If you are not in the Telegram channel and would like to join the giveaway, I mentioned this earlier, here's the Telegram channel link. It's in the chat right now. Step 1 to join the giveaway, enter the Telegram channel with the link that's just been dropped in the live stream chat where you're watching, or in the description down below if you're watching this if you're watching the recording of this later. Step 2, enter this form and just put in your name and email. You'll be added to our email newsletter, and we will email the winner to let them know that they got a free copy of the Edge Finder on Friday. So you've got just a little bit of time left to join the giveaway, and good luck. If you win, you'll get free lifetime access, unlimited access to the Edge Finder and all of its tools. So it is worth throwing your name in the hat for a chance to win it. Step 1, join the Telegram. Step 2, fill out that form that's just been dropped in there. Okay, guys, up next, we have Marco, who is Marco's Trading Journey, of course, on YouTube. He will be sharing his trading ideas and setups that he's watching in this market right now. Stay tuned. He's coming in right after this. If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show.
Hello everyone, welcome to my segment of the stream. So let me check if everything is working properly. I'm going to start with my TradingView analysis. So quick, let's say, recap of my watch list. I have the NASDAQ, gold, euro dollar, euro GBP. Those are my picks for today. And if you guys have any questions, make sure you put it in the chat. I have my chat open on the side and I'm closely watching for the messages. So, hey, FX Bashi. Okay, someone is in Turkey. Okay, yeah, so let's start with the analysis. So a brief overview of the DXY and the S&P. That should give us a sort of a view on what is going on. So the S&P 500 is going higher. It's in a really good uptrend, really nice, really strong. And I would believe this is going to continue. I would like to wait for a bit of a pullback to get in on some possible buy setups, but we are in a definite risk-on environment as far as the stock market is concerned. Now for the DXY, so for the dollar, it's actually going lower. So looks like this breakout of the trend line was a bit of a fake out. We had a really nice consistent trend line there, and then it got broken, retested, broke higher. Now it's pulling back. So yeah, we may continue with the overall downtrend. Of course, everyone has the Fed meeting in mind. So will they cut in September? Will they pause? How many cuts in 2025? How many rate cuts in 2026? Is Powell going to be replaced by a puppet of Trump? Is the Fed going to be extremely dovish? So that is what most people are wondering about. Currently, I do believe a rate cut is coming in September. There's like a 90% chance of a rate cut. Yesterday, we got inflation data, which is something that the Fed looks at. So they look at NFP, they look at the jobs market, and they look at inflation. NFP came in really bad, the last NFP. So there was some, I would say, signals, some warning signs about the jobs market in the US, and the inflation came in neutral. So let me just turn on the AC. Okay. And yeah, basically inflation came in a bit neutral. We had core CPI, which came in higher, and we had the other inflation that came in lower than expected. So if we look at the numbers, just so you guys know what I'm referring to, here you had, core inflation actual higher than the forecast, and then the inflation rate year on year is actual lower than the forecast. So I would call that a bit of a mixed signal. And that doesn't give me much confidence of rate cuts, and it doesn't tell me that there are not going to be any rate cuts. So that's why the US dollar is a bit tricky right now. It's a bit tricky. I'm not sure what to think. Me personally, I'm actually maybe neutral to a bit bearish because of this overall downtrend, because we had sort of cracks appear in the jobs market, and because I do believe that the rate cuts will come in September. So I'm actually looking for a buy setup on the euro dollar, for example. That's a really interesting pair for me to look for buy setups. In terms of gold, so I can see gold in the chat. Okay, goodbye FX Bashi. Gold. Yeah, silver, Aussie, Swiss. Okay, we're gonna do the requests. Gold is flat right here. So overall, yes, if you zoom out, it's in a massive uptrend, definitely exploding higher. But in the latest price action, it has been a bit flat. It has been a bit range bound in this area. So gold does not look so enticing. For me personally, I would say that the tariffs that we have, so I know Trump is very woke, has been very vocal recently about China tariffs, Swiss, India. So that can all be a bullish play on gold. Also, the uncertainty in the Fed, who's going to replace Powell? Is it going to be a Trump puppet? Is the Fed going to be extremely dovish? That all creates some added uncertainty. So if you get the head of the Fed that is not really an economist such as Powell or I think Waller, if you get a completely new person, it could create some uncertainty for investors. So gold could go up. I would very much like to buy gold. I have pretty much the same stance as Nick on this situation, meaning I want to see a breakout to the upside. And until that happens, I won't be looking to take any trades. I don't want to get chopped around inside of this range. An example that I often give is, well, I could buy right now, put my stop loss below this low, and then the markets continue to range around, I get taken out. And then I get in on, let's say, another attempt right here, stop loss below the low, price goes up, hits the resistance of the range, continues ranging around, stops me out, and then does nothing. So not the best price action for me to get in on a buy setup right here. You could consider maybe getting in on the bottom of this range. So what do you guys think? Is anyone looking to buy gold? If you are looking to buy gold, which levels are you looking at? Is anyone looking to get in inside of this range? I'm pretty interested to know. Because I think this could range for a really long time. Gold is known to be a asset that explodes, but it's also known to have sort of like you have crypto winters with Bitcoin, you can have a gold winter. So you could have a really flat gold market. So this can go on for quite a long time. Let's see. MBF, why is everyone so obsessed with gold? I just think a lot of traders love to trade it. It's because it has a lot of potential, because when it does trend, it explodes with massive force. So everyone wants to know, well, when will gold actually explode? Let's see, 33.50. Okay, I mean, you're getting right on the center of the range. If it fits your plan, if it's part of your strategy, if you backtested that sort of an approach, then just follow the plan. But personally, I think it's pretty dangerous to get stuck in this range, especially if you're with a CFD broker like I am. I'm with a CFD broker, and you're gonna get bad swaps. You're gonna get really negative swaps. You're gonna have to pay a lot to keep holding that position. Okay, so let's see. 3392. Yes, I'm looking for a buy opportunity. Let's see, 3392. Okay, somewhere around here. 3K, that would be okay. You're looking for a pullback. I saw the live stream from Chris Pulver. He's also looking for a pullback to this level. He does want to accumulate gold for like long term, but he thinks it's a bit overextended at this point. So he expects a bit of a pullback maybe to this level. And I think that's not a bad play if you want to go in with an investment approach. Okay, I saw a question as well. Hi, Marco. So Yoshi says, hi, Marco. Yesterday's core inflation came out higher than expected. Why would the market would want lower interest rates? Wouldn't it increase inflation further? Well, inflation actually came in mixed. So what you have to know, the Fed, so the US central bank actually keeps an eye on the core inflation. And core inflation came in higher than expected, but the inflation rate came in lower. So what did you write? Came out higher than expected. Well, it's mixed, right? It's mixed because the inflation came in lower, but the core inflation came in higher. So depending on which sort of inflation numbers you want to look at, you can make a decision. I personally would say it was a pretty mixed result. So we can't really deduce a conclusion out of that. I still think we're on a path for rate cuts. You know, current rate is pretty restrictive. Current rate is pretty high. So rate cuts should be coming. They are forecasted by the Fed. Again, we had the forecast interest rate from the Fed, the future projections, and they projected a cut in 2025. That is what people are expecting. Okay, short-term buys on gold. Well, for gold, you could buy the bottom, sell the top of the range. You know, you could buy the bottom, buy the support level, sell the top. So that could be done. Taking in some defensive assets. Okay, cool. Taking in some defensive assets. Yeah, gold is definitely a risk-off asset. So if you want to protect your capital, you could look to buy some gold. GBP/USD still in correction. Let's see. I mean, I had a sell setup. It was Owanda. Yeah, so I had a sell setup on GBP/USD. It didn't work out. USD is just losing a lot of strength. I think people are pricing in. I mean, they're definitely pricing in a cut in September. So a cut in September is, of course, very bearish for the dollar. That is why you would get GBP/USD going a lot higher with a lot of strength, and euro dollar going a lot higher on this strength. Okay, so that is why another reason why I'm looking for buy setups on the euro dollar. Mohammed says, yeah, it came in lower than expected. That supports the rate cuts because it means people are facing some problems with buying their daily needs. So rate cuts is a must. Look, the overall inflation came in lower, but the core inflation that the Fed places emphasis on came in higher. So I would say it was a totally mixed bag. Totally an uninteresting event. Okay, for long investment, you would say 3,100 for gold. Okay, 3,100. Yeah, but I would say 3K would be a nice support level. It's a really big round number. We might have only one rate cut this year. Yeah, we might see a price action before September. Then we will see a sell-off because the market won't expect more rate cuts. No one knows what's going to happen, but there's a 90% chance of a rate cut in September if you're watching the Fed watch tool. What are we going to do with our Euro GBP? Ryan asks about the Euro GBP trade. Well, for me personally, I'm just going to hold it. If you are in the Discord, this was a trade signal that I gave. So a buy on the 0.86565 level, stop loss at 0.85870. Got in somewhere around here on Monday. And basically, I'm just going to keep holding this position. The reason why I like the position, Euro is fundamentally very strong. So data from Europe is coming out better than expected. GBP is kind of a mixed bag. So GBP could have some problems with stagflation. What is stagflation? Stagflation is when you have low growth numbers and you have high inflation. If you look at the Edge Finder, all of the data is actually in the Edge Finder. You can open up UK and you'll see the inflation is not where you want it to be. It's kind of climbing higher, and the growth is also not the best. The jobs market, not the best. So the UK is cutting rates to stimulate the economy, but they're still battling with inflation. That's called a stagflation scenario. And usually a stagflation scenario is bearish for the GBP. Now, this trade is underwater. Unfortunately, the last UK numbers came in. We're getting a GDP number, but I think the unemployment came in better than expected. Let me see. There was some sort of data for GBP that was not the best. Yeah, here, unemployment actually came in a bit bullish for the GBP. So we kind of sold off here. GBP gained some strength. And as far as technical analysis goes, I liked this trend line and also this trend line. You can paint multiple trend lines. Okay, so I do think we are in an uptrend. I didn't want to get in right on the top, so you are getting in close to the... So I got in close to the 20 EMA, and I got in on a bit of a pullback. Okay, I thought this was a nice trade. I thought the reward to risk was there. Even if you just want to target these highs, you could still have a positive reward to risk, which is very important. But my game plan, if this does reverse, I'm going to trail the position. Okay, I'm going to trail the position underneath the lows. At the end of the day, my win rate is around 45%. So 45% win rate with 1.8 to 1 RR, or reward to risk. So those are the stats, which means I actually lose more than I win, or I win more than I lose, but most of the time, or like more times I lose a trade than I win, with a 45% win rate. So those are the stats. Okay, Safe says silver, sure. Gold might drop at the end of this week because Russia-Ukraine war might end. Nah, I don't know. I don't think it's going to end. I mean, they've been talking about sitting down, having deals, talking about ending the war. Zelensky, Trump, Putin, they all said they were going to sit down. They have been saying that for 6 months now. So I don't think it's going to happen anytime soon, unfortunately. I just don't think it's going to happen. Okay. Swap is eating us at the moment. I plan to hold on to it as well. Well, I mean, if you're dealing with swaps for these types of trades, if you're holding for 1 to 2 or 3 weeks, it shouldn't be a big problem. Swaps are a problem when you're holding for like 2, 3, 4, 5 months. So I personally haven't experienced much problems, a lot of problems with swaps. Possibly depends on your broker as well. I'm using IC Markets, so I know different brokers have different swaps, and it would be smart to look into what different brokers offer, what kind of swaps, fees, and commissions, so that you can save some money. For me personally, swaps are not a huge deal on this position. Okay, so silver. Let's see, silver. But yeah, if we get stopped out, part of the game, part of the probabilities, gonna go on to the next trade and just gonna keep following the plan. Silver, okay, this was an old trade. Let me hide this. I like silver. I like silver. Silver. Let me check the edge finder quickly. I'm gonna check it in my browser, so you're not gonna see it on the screen. I have to find some sort of an option where I can maybe put TradingView in my browser as well. Okay, let's see, silver, bullish. Okay, we're getting a bullish reading on silver as far as the edge finder goes. I kind of like this. Let me check the ratio. XAU USD. See, gold divided by XAG USD. Silver. Let's see. Gold to silver ratio, well, it's pretty close to the equilibrium. It's pretty close to the bottom of the range. It made a lot of sense to buy silver when gold was worth much more than silver, because it usually falls back. This chart usually falls back to the equilibrium. Right now, silver is not so bad. I would maybe prefer to get a breakout out of the highs. Okay, possibly a breakout out of the highs. Maybe just a bit more bullish momentum would be interesting to me. Gold is something that I would prefer more. I think if we do get a breakout, if we do get a breakout in gold, it could go up quite a bit. So it could appreciate quite a bit. Okay. So, hello, the ready writer. MBF says, but this time Putin comes. It's always something. You know, this time Trump really has a deal. This time they have signed this and this. This time Zelensky is open to this and that. So it's not done until it's done. Rumors are just noise. Rumors are just a bunch of noise. And best not to rely on rumors. Best to just wait out for real confirmed news, real confirmed developments, things that are put into a piece of paper, things that are put into contracts and agreements. Talking and rumors, just noise. Silver could move down to 33.30. I mean, I don't think it will. I think silver is just on a path to the upside. I think silver could place a little bit of catch up to gold. I don't see any reason why silver should go down. If we do get some more uncertainty in the markets, if gold does go up, silver should follow. So I prefer silver for buy setups. And I would look for buy setups if we do get possibly a bit more bullish price action. So NASDAQ is also on my watch list. Same thing as Nick. This thing is just going higher. It's not pulling back at all. I'm looking at some levels. This level of support, or this one that's a bit lower. Again, I want to see the price preferably pull back, give me a nice entry. So far, this has been a train that has just been exploding higher. And same thing as Nick, I don't want to get in on the all-time highs because I think we are a bit overextended. So it's not something that fits my plan. I would like to get a bit of a pullback here on the NASDAQ. Why is it exploding so much? Well, I know we had earnings. I think earnings are now mostly done. The big ones, like from the big companies, earnings were pretty good. You have AI, artificial intelligence, okay? That impacts the technology companies first. You have the US economy, which is doing pretty well. You're getting data that is not so bad. We're nowhere near a recession as far as the numbers go. So people have some extra money. They're parking it in the S&P and the NASDAQ, which is okay. So love to see this from my perspective as an investor. But as a trader, I would like a pullback. I would like to see a pullback. Did you see the US 30? Let's see, Dow Jones. My problem with the Dow is that we are now very close to this level of resistance. Okay, we are very close to this level of resistance, and we could definitely keep bouncing off of this level. So I think this level is pretty strong. You have 1, 2, 3, 4 very strong swing highs, and I think there are better opportunities out there. I am referring to the Nasdaq or even the Russell, which still has some room to go to the highs. Okay, still has some room to go to the all-time highs. So there is quite a free zone with the Russell to go up. And the Dow Jones is just, it's close to those highs, possibly forming an inverse head and shoulders pattern, which is bullish, but this can form for quite a long time. This can consolidate for quite a long time before we actually get a pop. And same as Nick, right now, I'm a bit skeptical on the US stock market. I do see that a pullback could happen pretty soon. So I do see that a pullback could happen pretty soon. And I think we are a bit overextended. So if the S&P decides to drop or pull back a little bit, like 5 or 10%, NASDAQ, S&P, if they decide to pull back 5 to 10%, they're going to bring down with them US 30, Russell. So yeah, that's my stance on the situation. Something that is crazy is Ethereum. Damn, another explosion up. So if you're an investor in Ethereum, this is absolutely awesome. I think we are close to all-time highs. Yeah, we are very close. I mean, in just a couple of weeks, we had an explosion up. Let's see. 215%. That's massive. Bitcoin is also being a bit bullish. Let me hide this. But not as much as Ethereum. You know, for buy setups on Bitcoin, I would first prefer to see a breakout of this level and then some sort of an entry pattern. So Muhammad says, yeah, I'm waiting this pullback. We all do. Okay, so you're referring to the stock market. I think we are. Do you think Solana is good for investments? I don't know anything about Solana. Low cap coins. I don't know anything about altcoins either, so I can't help you much. I think if you park most of your investment into Bitcoin and you put some in Ethereum, you should be fine. That's how I have my investment set up. So I have, I think, 80% in Bitcoin and 20% in Ethereum. I don't touch anything else. As far as trading goes, I may take a position on Bitcoin here and there, a short-term position, but Ethereum, I just cannot seem to see the reasons why Ethereum is moving. It's extremely, you could say, maybe technical, like fundamental reasons. I don't see much that Ethereum has just exploded up. I don't know why we had a massive sell-off here. I just thought this was going to go much lower at this point. We broke some key levels, and I thought we were going to go to maybe like 800, maybe like, okay, 900 or 1,000. Instead, we just exploded higher. So Ethereum, in my opinion, is extremely tough to read. Bitcoin has become easier. Bitcoin follows some sort of a structure, tends to move along with the Nasdaq, tends to act a bit like a technology stock, tends to like a strong US economy, tends to prefer a risk-on environment. So you can apply some fundamental analysis to Bitcoin. Again, you have the reading from the Edge Finder. Right now it's bullish, so the Edge Finder is bullish for Bitcoin. Technical analysis, I would like to get a breakout higher out of this level of resistance, and then I would be pretty happy to look for buy setups if we do break this key level. FX Bashi says, guess who I just subbed to? Marco, you should 2 people help the people who help us. Okay, so if you just subscribe to my channel, thank you very much, but I'm not sure what you meant from your message. Maybe you subscribe to someone else. But if you subscribe to me, thank you. Okay, something else I wanted to cover. Nasdaq we did, gold we covered, euro dollar. Yeah, I like this. I'm actively looking for buy setups right now on this chart. I'm probably going to be placing a buy limit. Probably going to place a buy limit at this level right here. Okay. I like the level. I want to see a bit more of a pullback. I would get in with quite a significant stop loss. So that is my game plan, and low risk. I'm not gonna go in with big risk on this position. Okay. So this is on the watch list, and I like the euro dollar. I think the euro is currently very strong. I think the dollar is a bit weak. I think rate cuts are coming, should weaken the dollar even more. So I think euro dollar is good. Technical analysis looks okay, above the 20 EMA, overall in a massive uptrend. I like everything about this. Okay, just a quick few more questions and then I'm done for today. I have ran out of time. So, hi Marco, my very first question for you in the stream. Why is Ethereum USD so sentimental, doesn't respect any technical or pullbacks whatsoever? I think because it's not so high in terms of market cap. I think because there's a lot less liquidity. There's a lot more big players controlling the market, and it's not as popular as Bitcoin. So that's why these smaller markets tend to move this way. Do I have a definite answer for you? I don't, because I don't know anything about it in terms of fundamentals or sentiment when it comes to Ethereum. Bitcoin was like this, but recently it did start to respect fundamentals. It did start to become a risk-on asset. It did start to follow the NASDAQ. It did start to move up when the US economy is doing well. Okay, oil. Unfortunately, we cannot analyze oil today, but tomorrow I'll be streaming again, so make sure you tune in. How can we subscribe to your channel? My channel is Marcos Trading Journey, okay? So on YouTube, Marcos Trading Journey, you can find me. FX Bashi says, yeah, there's links in the chat. FX Bashi says, yeah, you, Marco, I'm saying people should subscribe to my channel. Okay, thank you very much for the shout out. That would be about it. I have ran out of time. Any more questions? I'll be here tomorrow for the stream. My links are in the chat. Make sure you give me a follow. Thank you very much for watching, and I will see you in the next stream.
Thanks for watching today's show. Remember to subscribe if you're new and to turn on post notifications so you don't miss the next one. If you're looking for more free trading content, consider joining our Telegram channel, linked in the description down below, or find free courses, prop firm discounts, and broker sign-up perks on our website a1trading.com. That's all for today. We'll see you back tomorrow.